All right, let's get right into it. The prices for precious metals, gold and silver, have been absolutely surging lately. And it's got a lot of people asking, is this just some flash in the pan, or are we watching the start of something, well, something much, much bigger? So today, we're going to unpack the powerful forces at play here. So it really all comes down to this one question. What is actually driving these prices up? I mean, the easy answer is always, oh, there's just more buyers than sellers. But the sources we're looking at today suggest it is way more complicated than just a single news headline. There are some really deep currents moving way below the surface. And to really get what's happening, we have to talk about one key concept, momentum. In physics, it's pretty simple. It's mass times velocity. Well, in the markets, it's kind of the same idea. It's the size of the trend, that's the mass, times the speed of the price change. Think of it like the market's own inertia. And this quote from market expert David Morgan just nails it. He says turning a market trend is like trying to turn a huge ocean liner. It's slow, it's difficult, but once that thing starts moving in a new direction, wow, it has incredible force. And right now, that force, that momentum is pushing precious metals higher and higher. So what's building all this momentum? Well, it's not just one thing, it's a whole mix. You've got these automated trading programs, these algorithms that are kicking in. You have big institutions buying up silver for actual industrial use. Demand from Asia is way up. And you even have this classic Wall Street saying, sell in May, come back after Labor Day, which often holds true, and we are seeing that seasonal strength play out, right on cue. Okay, so we've got momentum. We can feel it. But how do we know if it's a real, lasting trend? For that, we need some kind of confirmation. And we're going to look for it in a place that is sending a very unusual signal right now, the mining industry. Okay, so this is where things get really interesting because we're seeing a total break from the historical pattern. See, normally the mining stocks, the companies actually digging the metal out of the ground, they start to rally before the price of gold and silver goes up. It's like the classic heads up that a rally is coming. But this time, the complete opposite happened. The metals took off first, and the miners, they got left in the dust. So why the big switch up? Well, for one, markets today are just different. They're driven by these super fast algorithms that react instantly to price moves. But it also took a while for the value investors, the people who are hunting for solid company earnings, to spot something pretty incredible. A lot of these mining companies are trading at prices that assume gold is still at $2,000 an ounce, not its recent price of well over $3,000. That is a massive, massive valuation gap. And now those value investors are finally catching on. And when they do, the results are just staggering. Get a load of this number. Newmont, one of the biggest gold miners in the world, is up over 104% just this year. To put that into perspective, that makes it the second best performing stock in the entire S&P 500. It's beating out hundreds of the world's biggest companies. The miners are not just catching up, they're doing it in spectacular fashion. But here's the kicker. This is the really crucial part. Despite this mind-blowing performance, as one analyst put it, almost nobody is talking about it. And that silence, that's one of the most powerful signals you can find as an investor. It means we're likely still in the early innings here, a long way from the crazy euphoric hype that usually signals a market top. They say true bull markets climb a wall of worry, not a mountain of hype. Okay, so now let's zoom out. Because to really, truly understand what's happening with metals, we have to look past the daily market charts and get into the much bigger, decades-long story of our money itself. And that story really kicks off back in 1971. That's when the US dollar was officially cut loose from gold. And since that moment, the dollar has lost over 95% of its purchasing power. At the same time, the national debt has just exploded, soaring past $34 trillion. And look, that's not a political statement, it's just the mathematical reality of our current monetary system. And you better believe that this reality is not going unnoticed. All around the world, other countries are watching the dollar's value decline, they're watching the US debt rise, and they are starting to make some very strategic moves. What we're seeing is this clear trend of de-dollarization. You've got nations like China, Russia, and India buying up physical gold at a record pace. They're building their own payment systems that don't need to use the dollar. And even here in the US, you have political figures starting to bring concepts like sound money back into the conversation, openly questioning the Federal Reserve. Now, at the same time all of this is happening, there's a big push towards something called central bank digital currencies, or CBDCs.
Now, they're sold to us as being modern and convenient, but sources point out some pretty significant risks. This kind of money could allow for total government surveillance of everything you buy and sell. It could even be programmed to have an expiration date or to be restricted for certain purchases. That's a level of control we've just never seen before.
And that brings us right back to the core appeal of precious metals. Gold and silver are the exact opposite of that. They're physical, they're private, and there's only so much of them. They can't be programmed, they can't be tracked, and they can't be created out of thin air with a keystroke. In a world that's becoming more and more digital, that analog reliability is looking more and more valuable.
So you take all these things, the market momentum, the undervalued miners, the shaky fiat system, and you put them all together. What happens next? Are we on the edge of a truly explosive bull run, or could something come along and derail the whole thing? Let's look at the two main scenarios that experts are debating right now.
So on one hand, you've got the bull case. This says we're entering the final leg up of a huge long-term bull market. This is the part driven by pure psychology, where excitement builds and prices make their biggest, fastest moves. But then, on the other hand, there's a bear case. This is centered on a potential liquidity crisis, a sharp deflationary shock, where people might sell everything, including gold, just to get their hands on cash. In that world, the dollar could actually get stronger for a bit, but, and this is key, gold's purchasing power, its ability to then buy other beaten-down assets, would still go way up. So which one is it going to be? Well, the truth is, nobody knows for sure. And that's why this quote is so important. The goal isn't really to predict the future with perfect certainty, but to understand the possibilities and to be prepared for them. Which leaves us with one final and I think really crucial question to think about. As we move deeper into a world of digital promises, of programmable money, and seemingly endless debt, what are we as a society going to decide is real, lasting value? At the end of the day, that's the question at the very heart of this entire trend. Thanks for joining me.